The CPI number just came out and we need to talk. Is the gold rally still intact? Are stocks coming down finally? And is the dollar back in business? We've got a lot of stuff to talk about. This should be a fun one as we break down the CPI data that came out today, but not only that, what it paints in full picture in tandem with the jobs data and the other economic data that we've been seeing out of the United States. What is coming next for markets? Let's break it down in this video. So first of all, here's a recap of what's moving here today. We see stocks actually mixed, but slightly lower here today. At the same time, we see the dollar index making a move higher. The pound and the euro, of course, are faltering on that. And same thing with gold, which we'll talk about more in just a moment with this big pullback that we're starting to see. And oil is kind of mixed on the day. The S&P 500 is slightly pulling back, but I'd be very curious to see if we in fact put in a lower high and actually can take out these lows. I'm looking for a bigger pullback, but not shorting this market. I'm just looking for a pullback as an opportunity to buy it myself. But for now, this market seems a little threatened by the inflation numbers that came out hot. At the same time, we had cool jobs data last week. And here's the NASDAQ, same story, of course, seeing a bit of a pullback here today and off of its all-time highs. But again, we'll see if we can break through support before seeing any sort of follow through to the downside with all of this data. And the Dow, same thing, kind of chopping around and lagging the other two for the most part. While we're on the topic of indices, the Nikkei dropped off the face of the earth all of a sudden. Not really, this thing has had a massive run overall, but has been suddenly challenged by the recent change in tone from the Bank of Japan, talking about stopping their kind of activities they've been doing recently, their ultra dovish monetary policy that they've set in stone. And the VIX popped recently, but is now giving back some of its gains here on the day. The dollar index is up, which is interesting and makes a lot of sense if you think about it. Hot inflationary numbers is going to, of course, increase the strength in the dollar because it might mean interest rate cuts aren't coming as soon. Remember, rate cuts are generally considered a bearish thing for a currency because it means, of course, the currency itself is going to be printed more if they do some sort of QE again, and it becomes less attractive to foreign investment. That being said, though, the overall picture for the dollar still seems weak, as with all of the data we've been seeing. Yes, you had a slightly hot inflationary read today, but the overall picture is still a good one for dollar bearishness in my personal view. If we see a pullback up to this 103.6, I would consider that more of a bearish opportunity than anything else. And here's a look at gold, which has been on a monster run here recently, but finally being challenged officially by this inflationary number today. CPI came out slightly hotter than expected and pushed the price of gold down. I want to break this down in just a moment a little further, but from a price action standpoint, we're sitting at support, and personally, I've been vocal about my position that I've had for some time now here on gold. If we break through this level here today, I'll be stopped out for a profit. If we hit 21.46, that's where my stop loss is currently placed. I should mention that if you'd like to get access to notifications for any trades that I take when I take them, you can join our VIP Discord channel. There will be a link down below in the description. It's the very first one in the description down below. If you use that, you can chat with someone on my team about the VIP membership to see if it's right for you, and we'll give you a discount if you send us a message. Okay, so let's break down these numbers a little bit further. So what we've got here is, in terms of the big headline year-over-year number, we saw a 3.2% print on CPI. Now, of course, that's 3.2 where we were expecting 3.1, and that is an increase in inflation. That is a acceleration of inflation where everybody was looking for a slowdown and a cooling in inflation. This, of course, throws a wrench in the idea that interest rate cuts are coming soon, and if that gets challenged, of course, so does a lot of other things. That sort of re-involves the idea of potentially seeing a stronger dollar in the short term. Core CPI also was hotter than expected on a month-over-month reading. Of course, I should mention we also have the 10-year bond auction happening at 1:01 p.m. US Eastern. That will likely be a market-moving event, as everybody's very keen on seeing how bond auctions are going right now. Are they going very well and lots of people are bidding, or are they not going so well? those will have huge impacts on the market. That's why it's a red folder on Forex Factory today. And with today's CPI number, the Fed Watch tool is looking very interesting. You can see that May is now expected to not be an interest rate cut. Well, it already was not expected, but I believe it was like 25%. We now went down to just 12.5%. So the chance of a rate cut in May seems pretty much off the table at this time. Jumping over to June, what we can see here is that we have our first expected rate cut to happen in, again, June still, while July is pretty much expected to be a rate cut by then. But there's a slight chance that we still could be holding interest rates steady by that time. We'll have to continue to watch the data to see how that plays out. But I imagine in the coming weeks, we'll get a more formal, decisive kind of view on the Fed Watch tool of what's going to happen in these upcoming meetings. But as far as May is concerned, it looks like we've kind of got that. Probably not going to see rate cuts in May. Unless, of course, something drastic changes. And if it does, I got you here on the channel. I'll cover that for you. By the way, just as we go through this video, if you would, hit that thumbs up button and subscribe to the channel if you want more of this content. I hope this is bringing value to your trading day. And if it is, I'd really appreciate if you subscribe if you're new to the channel. So let's paint a picture here now that we've got both of these data points behind us. We've got jobs and CPI here overall. Well, let's first of all go through what we just had recently, which was jobs. We had NFP, which showed some cool down in the labor market out of the United States. But at the same time, we just got the CPI number that was relatively hot. We got a hotter than expected print. So you take a look at all of this in its entirety and you say, well, jobs strong, but jobs slowing, but inflation kind of stubborn. This scenario still bodes well, in my view, for an overall bullish perspective on gold. Why? Because if you continue to see this narrative play out for some time, it really introduces that theory that we've talked about on the channel for some time, that risk of stagflation, where you see the economy continue to slide, but inflation continue to be a problem. If that happens, we may still need to see rate cuts from the Fed to help keep unemployment low, which is of course another thing. They don't want to see jobs slide too much because that would be very bad, right? If a lot of people are getting laid off and a lot of people are out of work, that's tremendously bad for the economy, but so is inflation. So if the Fed gets caught between a rock and a hard place, suddenly people go into the ultimate rock, they go into gold, right? So that's kind of why I'm still positioned long on gold and plan to be positioned long gold until this narrative is kind of squashed. But for now, again, tactically bullish. I've got a stop loss below market structure. That's kind of how I'm just staying prudent with my risk management. If it stops me out, stops me out. And if you stick around to the end of this video, I will show all of my current positions and my live P&L. Just stick around for that. I am also long Euro USD, but admittedly, it doesn't seem to be working out very well so far with today's number. However, my stop loss is below market structure, and if I get taken out, I get taken out, and I'll take a quick loss on this one. But if we can bounce back again, I kind of like the story overall for betting against the dollar. But again, I might be proven wrong on that theory here pretty quick. Generally, when I take a trade and I lose the trade, it's quick. And when I have a nice sized winner, it usually takes me some time to let that winner play out. So we'll see if I'm quickly out of this euro dollar or not. And here's a look at retail positioning. I always find this to be very interesting following a big news event where you get big volatility. People are still very much betting against the euro dollar. They're betting in favor of oil and the dollar Swiss. They're neutral on things like the Australian dollar, the Kiwi dollar, dollar CAD, etc. And indices, they continue to bet against them. Same thing with gold. So generally going to be more bullish on these things that are in blue, as this is our contrarian signal, and more bearish on things that are generally red. Here we can see the top setups algorithm page, which is basically looking through the Edgefinder's output scores for all the different assets that we track. Gold continues to stay near the top, and we actually have an interesting bearish read from US 30 or the Dow Jones at the bottom. So getting some bearish reads on indices in the short term, and gold continues to be a winner for us here on the Edgefinder's output summary. And again, remember that 25% off sale is ending today, so click the first link in the description if you're interested in that. And as promised, here's an overview of my positions. We have things like FXI, which is going quite well. I sold a put on FXI. I sold a call, covered call, and overall the position is up 28.60, which is not bad at all. And if I do get called away, that would be fantastic. What that means is that I basically take profits on my Chinese stock market trade. I also sold puts on XLY. That seems to be going very well. SLV, I am long. GDX, I sold a put, and GLD, the gold position is up about 5,200 bucks. So if we do get trailed out of that one, we'll take profits on that today. Otherwise, there is your current positioning. things. I should also mention that this broker that I'm using is WeBull. It's a US regulated brokerage, and if you're not already using WeBull and you'd like to, there will be a link down below in the description. And fair warning, that is a disclaimer to you, that is a referral link. If you use that link, you'll get some free shares, and so will I, and you'll be supporting my channel. I'll appreciate if you use it. Also, if you're not in the US or you are looking for a different broker for FX or for options or for whatever, there's a couple linked down below in the description. Same thing applies. They are referral links, and if you choose to use them, you'll get some special sign-up perks. There's actually some sign-up bonuses for the US Forex one, and then so on and so forth. So check them out down below in the description. With that said, guys, thank you very much for tuning into today's video. If it was helpful, make sure to hit the thumbs up button on your way out, and we'll see you back tomorrow. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. And for viewers on my channel, you can get 20% off your first VPS by using the link and the promo code TN20 down below. Again, 20% off with the code TN20, which you can find down below in the description.